Good morning, everyone. Just listening to chart of the week. Oh, yeah, Dan did that. Good stuff. Yeah, so here we go again. Should be no surprise in the Mr. Schizo market, the gyrations. Yesterday, the turnaround day. Today, the markets are down. Now, Apple getting beat up with tariffs, the China, yada, yada, all over again. And, it's like, enough of this already. If you're going to do something, do it, man. Let's get it over with. And maybe the market has one last gasp to the downside, whatever. A lot of these leader stocks like Apple and Amazon, they're down 25, 26, 27%, whatever. Are they going back up to the highs? Well, not for Christmas, of course, but you can't bet against those kind of companies. But we'll see how they develop. But, as I'm looking at this pre-market chart here on Apple, and just looking at the angle of decline here, it begins to stabilize. Next drop, smaller than that drop. So the momentum is slowed down and kind of pops up there. That pre-market drops again, comes up into the end of the day, and now back down. So the question here, as I'm looking at this, is this just part of a bottoming process here? I'm just getting a little drawing thing out there. So I'd like to just show everybody how to read this kind of price action without indicators, because everybody thinks I didn't mean to do that. Everybody thinks they need an indicator to tell them when momentum is slowing down, and they get, really messed up on this idea of bullish divergences or bearish divergences on indicators. You don't need any indicators. If you look at the speed at which prices are moving, and especially if they're starting a move, and I didn't go far enough back. Is it the start of the move here, 194? No, well, yeah, kind of. It was like a little consolidation right there. Let's just say it was here, right? And well, that was a pretty fast move to the downside, gap and down, and a little bounce up to minor resistance and back down again. But whatever that you're looking at, the time frame you're looking at, I should say, or whatever you're looking at, whether it's a stock, whether it's a futures contract, whether it's a currency pair, it doesn't matter. When you get an acceleration to the downside and it stabilizes and it goes down again and it goes down slower and it stabilizes and it goes down again, and the distance between the stabilization points are getting closer together, if you're looking at an indicator, it's going to show you this. And I know I didn't draw it exactly right, but you got the idea, right? That's your divergence. You don't need this on your chart to take your attention away from what matters. That's the price action. So now the question becomes, is this part of a bottoming process? All right. So you got the bottoming tail bar here. You got the volume pop. It's extended to the downside. I didn't look over here. What's over to the left? Is it at support? That would be a plus. So what we want to see here today, as far as Apple goes, is here's this negative news. It was down after hours. It's not plunging right now. It's stabilized. But does it break below here and continue lower? Right? Or does it opens lower down here and come back up again? And if we get that kind of price action, it's like a tell, right? It's like, hey, buyers don't care about this negative news. Somebody's accumulating down here with big money. So that would be what to look for in Apple, whether it can recover. Does it go down? Does it end with a red day? It's like, wow, nobody wants this, even though it's down here. So it's likely going lower. Point being, the lesson here is when you see acceleration, stabilization, accelerates at a slower pace, and so on. Momentum to the downside is slowing. It doesn't mean momentum can't speed up again. So that's why we have to look for the information that supports a real low being in place. And whether you use the hourly chart or you use, the hourly chart is stabilizing here, and you go to a 15-minute chart that breaks the trend, and then you buy a pullback. Good morning. You get the idea. So we're reading price momentum. We're reading stabilization. At some point, we're reading the break of a trend in a smaller time frame, because the break of this trend in the daily time frame is going to take a long time building support. So if you're trading, let's say, a climactic buy setup, which is going to be the subject of our MT Live on Wednesday, what I'm showing you here is how to take a climactic buy setup and use multiple time frames to trade that intelligently from an intraday trading point of view. From an end of day trading point of view, you make your decision based on what type of pattern you want down here. And from our approach, we're just going to let it trade above a prior bar's high, share size it for some point under the low, and wait to see what happens. So that's how to utilize multiple time frames and take a bias from a higher time frame, utilize it in a smaller time frame, and then actually find the turning point that where the trend breaks, and then intelligently trade it in the direction of your bias. Do you know what happened in futures? No, I don't. No, about that time I was starting to fall asleep, Alex, so I missed the event. I don't know, but we take a look at them. And not that I'm going to know what happened by looking at them, but yeah, hold on. All right, so let's take a look at those futures and see where they're at. Here's S&Ps. And so around 1 o'clock in the morning, 1:30, 2 o'clock. I guess you mean this. You want to go to a 5-minute? Sure. Yeah, well, Europe opens, Germany opens, 3 o'clock in the morning, Eastern Standard Time in the U.S. So I don't know why something would have started a half hour before. There's probably some news event that was released prior to that open, and futures just popped. And I would be interested to know if you happen to find out. So something happened there. And so whatever that bullish news was, it didn't last very long. Yeah. So there you go. All right. So we got some wild whippy price action in the futures there, retesting this low area right now. And I honestly don't know, about trading a direction here. Yesterday looked like, it could be turning around, and maybe it is. So maybe this is all just part of a bottoming process here. So what I do is at times this is early in the day, right? We're just starting out. Who knows where this is going to be? Yesterday from trading intraday, the markets held up really well. Let's go back to that. All right. They did well, chopped around. Buyers like, it's not going up. Let's run for the hills. Back down, right? Back up again. And then the Apple news after hours. And so now we're into, this crazy mess right now. So with this kind of price action, overlapping bars, tails, whipping around like that, stay the hell away. All right. That's the message here. It's like, don't be a hero, let somebody else go in there and figure it out. Let them get sliced and diced, and wait for these bars to get smaller in size and these ranges to contract, which means the volatility is contracting, and a move in one direction or the other is about to happen when you see that contraction in range. So over here, we've got a retest of the prior low. We had this move up, and I don't know what this tail is up here that happened overnight, but in reality, what's happened here with this news is like of Apple and trade tariffs is like big deal so far, right? It's early, big deal. Up in the same area, give or take, a little lower than where it was yesterday. That really doesn't tell us much other than some whippy price action, and we still don't know whether this is going to hold or whether it's going to make the next leg down there, because these weekly charts are not so great. I gotta keep switching back and forth here to make this work. All right, so last week was the big down week. A lot of it was on a gap. And this pattern is one historically that I like to see a break below that prior red bar's low. Some continuation and then a reversal. If you ask me, write the script to go long this market right now, that's what it would be. Break below this low, maybe below the bottoming tail bar, and then a reversal. And for me, I would say coast is clear with a stop and money management based on that pattern, looking for it to come up here. And those type of patterns, retest patterns, typically get above here. They stall and then they keep going. All right. So let's move on. The NASDAQ futures, right? That looks like it could be a measured move to the downside. I mentioned this yesterday, but we've got all these reference points here. So let me go back to the daily chart, and same situation here. In a downtrend, a little extended lower, greater than 100% retracement, stabilization for a few days, moving up, and we'll see what today brings. Right? There's the same whippy price action, blah, blah, blah. And Dow futures, same story, right? Same story. We're not getting information to lead us one way or the other here as far as our bias based on this whippy price action in all of these markets. So not setting up easy open. And that's okay. Doesn't have to be, right? Recognizing what we're dealing with is a big plus, because we're not going to put our head in the lion cage because we just want to press the button. Bonds getting a little weaker here up at the area of this prior resistance. So normal price action, just a pattern for me that says stand aside. I don't know yet what that's going to do. Bottoming patterns tend to be erratic. And they tend to go down and retest again. Crude oil, some stabilization right ahead of the $50 big number there. There is a low right in that area, and then ultimately that big level down there. And, I guess just technically we've got some that are willing to buy down here and others that are just not so willing to sell just yet. We can assume that there's still plenty in here that are holding losses that were buying on the way down and wishing that they didn't. Nothing there. Gold is down a little bit, just overlapping bars. Really nothing happening here either to give us any direction. And just peeking through some of what's moving up and down here. And what does the yield curve look like? It's not inverted, Frank. It's narrowed quite a bit. I'd have to go to another page to bring it up, and I could do that later in the day and review that with you. It actually, well, it wasn't close to inversion, but the levels where my warning level is, it was getting close there. And then over the last month or so, it improved. So we don't have worries there. But you can get, deep corrections within a bull market that, the market itself, right, especially the Dow, which is widely followed, may not get to that theoretical bear market of a 20% correction. But I've seen plenty of markets that weren't in a bear market that decimated individual sectors and stocks. So, that's what the media reports. as far as market goes in bear markets. That's their line in the sand, and I guess others as well. But just because the market itself isn't hit that level, we see Apple where it's at. I mean, I think even Amazon, which is King Kong, is down 25% or so. So, and what someone actually, I got a question from a subscriber, who's actually, wow, I was impressed, not impressed, but somewhat happy and surprised. I mean, someone that had contacted me that had been a student for, I don't know, 15, 20 years, whatever, but, and asked about Amazon and about corrections and such. And what I told her at the time was I went back and looked at the time when the yield curve inverted. And you're reminding me of this since you're asking, Frank. And Amazon went down a tremendous amount at that time. And it may not have been the Amazon of today back then, but when you do get that yield curve inversion and that bear market, even the best of stocks can get sliced by 50% or more. So that's something just to keep in mind. At some point, it's likely to happen. And, of course, when that happens, I'll be telling all of you, of course. So that being said, I've taken a little too long. Let me hand it over to Dan.
No worries. Good morning. That's not all valuable stuff. Some days we have more open positions, some days more interesting gaps, and today is a nothing day really in that regard. So I like all your little descriptions there about, let them go in and get chopped up. We aren't doing it. If people are visiting us as new subscribers, I've got some emails like, you guys don't seem like you're as active as you have been. And I said, you're exactly right. And we do that for a reason. I said, look at the daily and weekly charts. I don't have confidence, as Greg and I were talking together around 3 o'clock yesterday. What's our confidence that this is a low, yesterday's low being the low for the week? Like, I don't know. Trading's about high probability setups. When we don't have them, just chill out, wait, let them fight. Apple, we were talking about yesterday into the close that it had signs of let's watch it today, either over the high or bullish intraday. But now today's bearish gap is you're still in the penalty box. You aren't ready yet. And I think it was Jeffrey, a new subscriber in here, and we were talking about various bullish option trades on this. And I said I surely would wait. My confidence on that being a reversal yesterday was fairly low. But we have different levels of confidence, which is, you hear me throwing around different terms, tier 1, 2, 3. He's on the warm-up bench. I use different things to highlight the readiness. Let's look at some opens. We have Moss still for a while, covered call, Cree covered call. UAL was a disappointing close yesterday. It looks like a small little gap up here. It's just a Friday put spread. Yeah, definitely, Alex. With that, yeah. Yeah, I would say tier 1s are ready to go. But I actually came up with the something for the bottoming patterns because it's not a traditional bullish retracement, bullish W pattern if it's in a downtrend. So that's where I was saying, give me something else. But yeah, tier 1s are, everything is a well-oiled machine. Cold, we never triggered, and he's getting close to canceling. AMD did not trigger, but it still looks great. It looks better today than yesterday. Why? Because I have a whole nother day of 15-minute charts that are holding. So good. FL, we didn't get our desired credit. That was a way out of the money put spread. BECN we have as a put spread, but I made it purposely with the weak market having to get over this big tail. It didn't trigger, and you know, I doubt we're going to get the credit anyway, so we might have to adjust it if we still want it for this. Let's look at a couple gappers here. UTX popped yesterday, and it was in the journal, and I don't know when the news came out, but they're splitting or talking about splitting their big old conglomerate into 3 parts. And so this is the market's reaction to, is that going to create me more value? Is that going to make my common shares of UTX more or less valuable? The board action of wanting to split. Yesterday was bullish, maybe it got leaked out, and today it's not. Look, now it's gapping under this red bar. So since it's in the news, this is actually a bear call credit spread setup for me. Let's keep an eye on that. BMY, I just saw in the gap list, gapping under 50 bucks, way the heck down here. It's a sell setup on the weekly. We'll come back to that. The old goose, when it had this earnings gap, is now gapping down under here. So this is an M top, lower high. So that's a bear call spread candidate. GSM, I just saw this little guy going by the ticker. I don't know what he does, but that's a nasty haircut. This was that's nasty. EWW, I got an email that this newsletter service is bullish on this pattern, saying it's oversold. And it's just not our pattern. That's a bearish downtrend, no follow through to green bars, bearish gap on Friday. There's zero reversal on this daily chart. It's a falling knife on the weekly. It's just, that ain't our strategy. So that's simple. Echo Victor, what are you doing? 40, there's nothing there. I don't know if that was earnings or, yeah, that was earnings. Kerbal is earnings. Gap and crap, so I don't like those to trade bullish. You know, all gapping trades, I like a liquid pre-market to be in alignment. HIB, I think, had earnings 17 and a quarter, nothing to do there. BKE earnings. That's a bearish gap. We'll keep an eye on him. General Motors was in the journal, and I guess that came out yesterday because I remember one of you saying it was halted, and you know, that explains a big move here, that they're gonna downsize a bunch of firms. Home Depot, we talked about into the close yesterday with Lita, who was looking at LOW for a put spread, and we all together said, nope, let's not do it. We got 1 minute to go, but we're fine. Old Spot, keep an eye on him. Hilton was bullish yesterday. STT was bullish. Now see, I keep them on my radar until I either trade them or the pattern says you're fired, you're out of here. ACIA, we found this scanning together. I like it over this red bar. Work, it's worthy of a watch. It's going sideways here. Hain, remember this one we talked about as a bearish pattern, a horrible quality of a bottoming pattern. Look at these railroad tracks down, bearish consolidation in the lower 80% of this, bearish 1, 2, 3 on the weekly. And so I kept it there as a short watch. I just didn't trigger it. Xilinx, I have him here just because of the relative strength award in the semis. AMD, we talked about, still looks good. USO, not for a while. ADI, over yesterday's high. Would not be bad for a put spread and or maybe day trade and or maybe 1 to 2 day swing trade. Same with AMAT. These things are they're bottoming. UNG, we had a call spread, but yesterday's gap down messed it up.